Here we are, the day after Election Day, and the people have spoken. They're upset about the direction this country is heading, with the economy and jobs being the primary concern. Dumping a handful of Congress critters out of office might feel good, but it isn't going to do much to change things. Even if the American people could somehow vote out every single member of Congress, it would still not do much to fundamentally change our economic situation, because Congress does not run the economy, and neither does the President. The Federal Reserve controls the money supply. The Federal Reserve controls our interest rates. If the U.S. government wants more money, it has to get it from the Federal Reserve. In a few days, the Federal Reserve is going back to Jekyll Island to celebrate its 100-year anniversary of the infamous 1910 Jekyll Island meeting that spawned the draft legislation that would ultimately create the U.S. Federal Reserve. The conference will be held on November 5th and 6th in the exact same building where the original 1910 meeting occurred. Sadly, most Americans have no idea how the Federal Reserve came into being. It was a system that was designed by the bankers and for the bankers. Now, the bureaucrats running the system are returning to Jekyll Island to congratulate themselves. Those attending include Federal Reserve Chairman Ben Bernanke, former Fed Chairman Alan Greenspan, Goldman Sachs Managing Director E. Gerald Corrigan, and the heads of the various regional Federal Reserve banks. Looks like there will be plenty hors d'oeuvres to go around. But should the Federal Reserve really be celebrating their accomplishments at a time when the U.S. economy is literally falling to pieces? Today, 63% of Americans do not think that they will be able to maintain their current standard of living. 1.47 million Americans have been unemployed for more than 99 weeks. We are facing a complete and total economic disaster. The truth is, the Federal Reserve has more power over the economy than any other single institution in the United States. It is the Fed that primarily determines if we will see high inflation or low inflation, whether the money supply will expand or contract, and whether we will have high interest rates or low interest rates. The President and the U.S. Congress have far less power to influence the economy than the Federal Reserve does. As this election has demonstrated, the American people are absolutely furious about the state of the economy, but voters have been mostly blaming our politicians. They just don't understand that it is actually the Federal Reserve that has the most control over the economy. Since 1913, inflation has been on a relentless march upwards. U.S. government debt has increased exponentially, and the U.S. dollar has lost over 96% of its value. The Federal Reserve was created to enslave the United States government in an endlessly expanding spiral of debt from which it can never be able to escape. It is a trap from which the U.S. government will never be able to get out of under our current system. Now many at the Federal Reserve are touting more quantitative easing as the solution to our economic problems. But anyone with a brain should be able to see that creating a gigantic pile of paper money out of thin air and dumping it into the economy is only going to make our long-term problems even worse. But the Federal Reserve System was never designed to benefit the American people. It was designed to make massive amounts of money for the banking establishment. It was created to transfer wealth from the American people to the U.S. government and from the U.S. government to the super wealthy. So now that the election is over, did it feel good? Maybe. But get ready. Sad truth is that the Federal Reserve is at the very core of our economic and financial problems, and that is nothing to celebrate.